Hello, ladies and gentlemen. My name is Greg Michaelowski, and this is a Forex commentary for FX Street, brought to you by FXDD. I'd like to take a look at a technical look at the market, but of course we do have some fundamental news coming out as well. We the Fed is going to be meeting tomorrow. The expectations are that they do not have a change in their policy. The comments from the Fed will certainly be talked about and analyzed by the market to see if they're any more bullish or bearish, or let me just say change that to dovish or hawkish in their comments, and that will be of interest to the market at that time. In the meantime, we are seeing some consolidation in some of the markets here today. The dollar Canada has, however, been the Canadian dollar, let's just say that has been helped along by higher commodity prices and higher oil prices. So we are seeing the dollar Canada move lower, the Canadian dollar move higher. And from a technical perspective here, the market has come down, tested a 61.8% retracement of this move that we saw on Friday. Taking a longer term view of the dollar versus Canada, we've been in a just a consolidation type range. This is probably over a 2 week period here, and of note here is this blue line right here. This blue line represents the 100-hour moving average, and that 100-hour moving average, as you can see, is currently at the 102.78 level. Well, with the market trade at 102.74, right at that level, and so the market has a decision to make which way does it want to go. But also, as you can see, actually, I'm going to zoom in here and show you this trend line. You have this trend line here. We put a parallel trend line here, and that trend line comes in currently around the 102.80 level. So we've got this consolidation of this trend line coming in at the same level as the 100-hour moving average. That's going to increase the importance of the level as well. Moving down to another trend line I have in this chart, and this one comes all the way going back all to August 31st and connecting the highs here on September 8th, and that trend line we broke through on Friday, and you can see the correction here today on the back of the stronger oil prices has sent the price back down to test the bottom side of that trend line, the underside, if you will, of that trend line. We got a little bit below it here. The line came in at 102.65. The low came in at 102.61. Once 4 pips amongst friends, but you can see that the market rebounded. And this current hour is trying to figure out which way does it want to go. Does it want to go higher? Does it want to go lower? A higher clue would be a break of this 102.80 level, and a lower clue would be a break of the trend line on the downside. 102.05 to 15 level is going to be a key level on the downside. You can see how we had two bottoms there last week at the 102.15 level off the daily chart. If I go to the daily chart and take a look at the 102.05 level, go back here, November 20. Actually, that's October. What is that? October 15th or 14th, October 16th, the market bottom at the 102. 0.55 level and bounced sharply to the upside. Next time the market came up there, you could see a number of different times the market had that level was a key level. And although the price moved below it here, here, and here, each of those times that was very limited moves below that level. And when the market was able to move back above, look at the surge, the upside, the surge, the upside, surge, the upside. That's the essence of a good support level, is the ability to fail and then have the surge go the other way. Whenever you see a key trend line or a key line broken, you should see momentum in this direction to the downside. What we saw instead was a failure and a move back to the upside. So 102.05 low is going to be a real key level for the dollar versus Canada. I want to keep the focus on the commodity currencies, and we'll transition into the Aussie versus U.S. dollar. We are seeing gold up today, and copper, mild copper. There's some talk from Goldman Sachs that copper. There's going to be a shortage in 2011 for copper, and so that may help prompt the Aussie versus U.S. dollar. In addition, we had the Reserve Bank of Australia's Stevens talking about how the central bank may have to raise rates, especially if the mining industry continues to do well into 2011, and that also has given the Aussie versus U.S. dollar a boost to the upside here. Now off this daily chart, I've connected lows here and I've connected highs here, and we are at record or near record high levels. We had highs earlier today at the 94.93 level, and if we are able to move, continue this directional move to the upside, 95.50, 51 is going to be the level that we're going to be watching. That connects these highs right here, and oftentimes the market will stall at those highs. It could go through it, but that will be the first level of resistance or a target level on the top side. So once again, that level comes in at around the 50 level, 195, 50, 51 level on the daily chart. Now let's take a look at the hourly chart and see if we get any clues from a technical perspective, whether it's showing any bearish tendencies. And you can see, no, not any at all. In fact, we have the market tested this trend line here. We actually moved a little bit below it here, and just like that other chart where we saw in the dollar Canada, where we saw if the market breaks a certain trend line, you should see directional move to the downside. No, not today. We saw the market bounce back higher. I'm going to zoom in here and show you how the market went below not only the trend line but also through the 100-hour moving average at this point, and we had to move down to Friday's lows here. But just like Friday, when the market broke below these key technical levels, market rebounded back higher. When we rebounded back higher, this time we had some time to push the market to the upside, and lo and behold, it certainly did. We moved up to the new highs at the 94.93 level. Now we have had some consolidation over the last 3 or so hours. So let's see how that has an effect on the 5-minute chart. And if I move the Fibonacci from today's low to the high, because it was been more or less a trend day, what this has allowed is the 100-bar moving average to catch up with the price. It caught up at this point, and the market corrected down to a Fibonacci point. Actually, I'm going to move this back over here. You can see how the market actually came down to the 38.2% retracement at that time of this move. Move from today's low to the high came down 38.2, and the market moved off from that level. Now that we move up to the new high right here, the 38.2 has moved up to around where the 200 bar moving average is, but right now the next level of support actually comes in at the high from early in the day at 94.67, and then the 100 bar moving average at 94.60. Look for buyers against those levels. Why? Because it's a low risk trading opportunity, and look for momentum move back up to the upside. And if the level does hold, I wouldn't be surprised if we head up toward that 95.50 level in the Aussie versus US dollar over the next 24 hours or so. Looking at another currency pair, the New Zealand versus the U.S. dollar here. Today we went up and tested last week's, last Thursday's high price. That high came in at the 73.94 level, and today's high came in at 73.92. So the failure to take out that high has led to a little retracement back to the downside here. I have a Fibonacci of the daily chart that goes from the high going back to October 2009 down to the low. We are above the 61.8, that golden ratio there, which gives it a little bit of a bullish bias, and you can see that the correction came down and tested that level. The low off this correction came down to 72.13, and the 23 level is that 61.8% retracement level. So let's watch that 72.23 level on the downside tonight. We're not nearly close to it at 72.90. I meant the correction last week went down to that 23 level. We are sort of in between the resistance here and the support here at the 72.23 level, with the market trading at 72.90 for the New Zealand versus US dollar. Now let's go to the hourly chart, and what we can see, if you connect these lows, this low down here, and we put a parallel trend line across today's highs, it kind of lines up right there. So I like fitting, or not necessarily fitting, but looking for parallel trend lines, guardrails that the market can lean against, and this holding of this parallel trend line here certainly puts that in that realm of being a decent enough resistance level on the top side. So that line comes in at the 73.19.20 level currently on the current hourly bar. So we'll be watching that level. It's also near the 73.23 level, which is the 61.8% of this move to the downside. This move from the high on September 14th down to the low on September 16th, last week's basic high to low trading range. On the downside, this trend line currently comes in at 72.68. So draw these lines in, draw this line on the bottom, connecting these lows, and then draw a parallel line on the top that connects those highs. And you'll be prepared to watch the movements yourself. Put it back in line there, and to be able to use those support or resistance levels as key borderlines. Now, if the price should break below or break above each of these things, then you'd look for further momentum in the direction of each of the breaks, and that's what that's what you look for. When break a trend line or something like that, you look to see moves to key levels. In between, you look for support or resistance against those trend lines or these moving average lines, and then go from there. Taking a look at the 5-minute chart. The 5-minute chart here on the New Zealand versus U.S. dollar is not as directional as something like the Canadian dollar we saw or the Australia dollar. We're seeing a lot more up and down action here in the New Zealand versus U.S. dollar.